Hey everyone, welcome back to Tesla Daily. Today is March 28th, 2026, and we have some exciting updates to share. First up, let's talk about Tesla's charging network. It's expanding, and that's great news for all of us. More stations mean more convenience, especially for those long road trips we love. Now, on to something really cool. Tesla's Semi has made a significant breakthrough with its battery technology. This could change the game for electric trucking, making it even more efficient and reliable. And if you're a fan of SUVs, we've got a little teaser for you. Tesla is hinting at a new SUV model, and I can't wait to see what they have in store for us. Switching gears, let's look at Tesla's Q1 delivery insights. The numbers are in, and while there are some ups and downs, it's clear that demand is still strong. We're seeing a lot of interest in their vehicles, which is encouraging. In another interesting move, Tesla has lowered the age limit for their robotaxi program. This could open up new opportunities for younger drivers and expand the service even further. So, as we look at all these updates, it's clear that Tesla is continuing to innovate and push boundaries. Sure, there are challenges along the way, but we're optimistic about what's ahead. Let's keep our eyes on the road and see where this journey takes us. Tesla Inc., NASDAQ Tesla, has made a significant announcement regarding its semi-truck, revealing that the vehicle's battery is engineered to last an impressive 1 million miles. This bold claim was made by Dan Priestley, the semi-program lead, during an appearance on the Jay Leno's Garage podcast. The longevity of the battery directly addresses one of the major hurdles in electric trucking: vehicle lifespan. Priestley emphasized the economic advantages of the Semi, stating, "The economics are right. The product is ready." He highlighted that the Semi is approximately 50% cheaper to operate per mile on energy costs in California, with a total cost of ownership nearly 20% lower nationally compared to traditional diesel trucks. This positions the Semi as a compelling option for fleet operators who typically plan vehicle life cycles around 500,000 to 1 million miles. Charging efficiency is another key feature, with the Semi capable of charging at up to 1.2 megawatts, allowing it to recover about 60% of its battery capacity in just 30 minutes. This rapid turnaround is crucial for long-haul operations, where continuous use can help maintain battery health by minimizing prolonged high charge levels, a factor noted by Kelley Blue Book. Tesla is also expanding its infrastructure to support the Semi, with plans to deploy mega-charger stations across 64 locations by 2027. This expansion is part of Tesla's broader strategy to enhance the viability of electric trucking. In terms of engineering, the Semi's battery pack is integrated into the chassis and paired with a dual-axle powertrain that balances performance and efficiency. Priestley noted a 7% improvement in the Semi's aerodynamic performance, enhancing its overall efficiency. Additionally, the Semi shares key components with the upcoming Cybertruck, which could facilitate scaling production. Despite facing production delays since its original 2019 target, Tesla's Nevada Semi factory aims for an eventual capacity of 50,000 units annually. Priestley reassured listeners that demand remains robust, stating, "We have ample demand." As we look forward, Tesla's advancements in battery technology and infrastructure could significantly impact the electric trucking market, potentially leading to increased adoption and a shift in fleet management strategies. The long-term outlook appears promising as Tesla continues to innovate in this space. Next up, another key development. In a bold move signaling a shift in Tesla's vehicle lineup, CEO Elon Musk has teased the arrival of a new SUV, dubbed the Cyber SUV, which aims to be way cooler than a minivan. This announcement comes on the heels of Tesla's decision to discontinue the Model S and Model X by mid-2026, marking the end of an era for these pioneering electric vehicles. The Cyber SUV is expected to leverage the existing production capabilities at Giga Texas, where the Cybertruck is manufactured, allowing for a potential output of 150,000 units annually. Musk's hints suggest that this new vehicle will not only cater to families, but also address a growing market for larger, luxury SUVs. In a recent exchange on social media, Musk acknowledged the need for a vehicle that can comfortably fit 3 child seats in the back, a feature that many standard cars struggle to provide. He humorously noted, "Well, I guess we should solve this," implying that the Cyber SUV could indeed facilitate family growth. A Cyber SUV is expected to utilize the Cybertruck's robust 48-volt architecture and steer-by-wire system, providing a spacious 3-row interior that could rival competitors like the Cadillac Escalade IQ and Rivian R1S. This strategic pivot towards larger family vehicles aligns with Tesla's broader vision of expanding its product offerings beyond traditional sedans and compact SUVs. Tesla's chief designer, Franz von Holzhausen, has previously hinted at the Cyber SUV's potential, urging fans to wait and see. With the Cybercab robotaxi entering mass production next month, the timing seems right for Tesla to explore this new segment. The Cyber SUV could not only fill the gap left by the Model X, but also position Tesla as a leader in the luxury SUV market. As we look ahead, the discontinuation of the Model S and X may be bittersweet, but it opens the door for innovation and new opportunities. The automotive landscape is evolving, and Tesla appears poised to lead the charge with its upcoming Cyber SUV, which promises to combine ruggedness with family-friendly features. While we remain cautiously optimistic about the timelines and execution of these plans, the potential for Tesla to redefine family transport is indeed exciting. Now let's shift to the next story. In a pivotal moment for Tesla, we are witnessing a significant shift in the electric vehicle EV landscape. With fuel prices expected to spike due to geopolitical tensions, Tesla's market share has jumped to approximately 18% of deliveries this month, up from just 10% at the start of the year. This surge is largely attributed to a large shipment of Tesla models hitting the market, with 1,085 vehicles delivered so far this month. Notably, the Model Y leads the charge with 812 registrations, surpassing competitors such as JQ and Toyota. However, as we approach the first quarter delivery report expected in early April, analysts are keenly watching how Tesla's demand holds up in the absence of US EV tax credits, which previously supported about 30% of sales. Gene Munster, a prominent analyst, emphasizes that this report will be our first clear indicator of underlying demand trends. Wall Street anticipates around 466,000 deliveries for the quarter, reflecting an 8% growth year over year, despite a decline from the previous quarter's 418,227 units. The current environment presents both challenges and opportunities. While Tesla's deliveries are projected to decline from the last quarter, they still represent a positive trajectory compared to last year. Munster notes that even modest growth would signal resilience amid a backdrop of reduced spending from traditional automakers, which have cut back on EV investments, potentially leaving Tesla with a larger market share. Looking ahead, Tesla's strategy remains focused on high-volume models and advancements in autonomy. The company is expected to deliver over 1.6 million vehicles this year and aims to exceed 3 million units by 2030. As we navigate these uncertain times, the upcoming delivery report will be critical in understanding Tesla's position in the evolving automotive landscape. In summary, while the immediate outlook may appear mixed with potential declines in quarterly deliveries, the long-term growth strategy and market dynamics suggest a promising future for Tesla. As we brace for the upcoming report, we remain optimistic about Tesla's ability to adapt and thrive in a competitive market. Next up, another key development. We are witnessing a significant transition at Tesla as the company begins deliveries of the updated Model Y lineup in British Columbia. After weeks of uncertainty regarding delivery timelines, customers in Vancouver received their Model Y performance and rear-wheel drive RWD vehicles, marking a crucial step in Tesla's ongoing production efforts. This development comes as Tesla also announces the winding down of production for its flagship Model S and Model X vehicles, a move described by CEO Elon Musk as an honorable discharge. The first deliveries in British Columbia are a relief for many buyers who were initially told they might have to wait until May or June. With these deliveries now underway, we can expect more vehicles to arrive. Now let's shift to the next story. In a notable shift aimed at expanding its autonomous ride-hailing service, Tesla has officially lowered the minimum age for passengers using its robotaxi network from 13 to just 8 years old. This change, detailed in an update to its rider terms of service, reflects Tesla's growing confidence in the safety and reliability of its software across a wider demographic. However, children aged 8 to 17 must still be accompanied by a parent or legal guardian during their rides. This policy adjustment comes as Tesla aggressively scales its robotaxi ambitions, with plans to launch the service in several major cities including Dallas, Houston, Phoenix, Miami, Orlando, Tampa, and Las Vegas in the coming months. Currently operational with safety drivers in the San Francisco Bay Area, the service is also ramping up unsupervised rides in Austin, Texas. The company has been preparing for the introduction of the Cybercab, a vehicle designed specifically for autonomy, which is expected to significantly reduce operating costs once it enters mass production next month. In conjunction with this age reduction, Tesla has also increased its pricing structure for the robotaxi service, raising per-mile costs by 40% and tripling the base fare from $1 to $3. This pricing strategy indicates Tesla's confidence in the demand for its unsupervised ride-hailing experience, as the company positions itself as a serious competitor in the autonomous vehicle market, particularly against rivals like Waymo. While the robotaxi service is not yet fully autonomous in California, the recent changes signal Tesla's intent to normalize robotaxi rides as a standard mode of transportation. These small policy tweaks are what will eventually make robotaxis feel like a normal part of everyday life, noted a Tesla watcher. As we look ahead, the long-term outlook for Tesla's robotaxi service appears promising, especially with the anticipated launch of the Cybercab and the expansion into new markets. However, the transition to fully autonomous operations remains a critical milestone that Tesla must achieve to solidify its position in the rapidly evolving landscape of autonomous transportation. Here's the next update you should know. As we navigate the evolving landscape of technology and innovation, speculation is intensifying around a potential merger between Tesla and SpaceX, particularly as both companies embark on ambitious projects like the Terafab chip manufacturing facility. This initiative aims to enhance Tesla's AI capabilities for electric vehicles, EVs, and humanoid robots, while also supporting SpaceX's space-based data center needs. Analysts, including Dan Ives from Wedbush Securities, suggest that this collaboration could be a precursor to a full merger, linking the realms of electric vehicles, AI, and space infrastructure under one corporate umbrella. The Terafab project is significant, as it represents a strategic move towards vertical integration in semiconductors, which is crucial for Tesla's full self-driving FSD technology and the development of Now. Let's shift to the next story. In a significant turn of events, all 11 co-founders of Elon Musk's artificial intelligence startup, xAI, have departed the company. This mass exodus culminated with the recent departures of Manuel Kreuss and Ross Nordin, marking a critical moment for a company that Musk himself admitted was not built right the first time around. The restructuring follows SpaceX's acquisition of xAI, which valued the AI company at a staggering $250 billion. As Musk prepares for a potential IPO of SpaceX, which could target a valuation of $1.75 trillion, the future of xAI remains uncertain. The departures of these key figures, who brought extensive experience from leading tech companies such as Google and Microsoft, raise questions about the company's direction. Cross-led, here's the next update you should know. In a troubling turn of events, Tesla vehicles have recently been implicated in two significant incidents that highlight ongoing concerns regarding driver safety and the use of autonomous features. In one case, a quadruple amputee and cornhole champion, Dayton Weber, is accused of murder, with reports suggesting that the incident may have been captured by his own Tesla. According to a search warrant, the vehicle's advanced camera system could provide crucial evidence in this serious case. Local resident Michael Corbett remarked, "These cars are rolling computers," emphasizing the potential of Tesla's technology in legal matters. In another incident, police in Vacaville, California, arrested a man for DUI after he was found passed out behind the wheel of his Tesla Model, Now let's shift to the next story. In a significant move to bolster its charging infrastructure, Tesla has opened a pioneering city-branded charging station in Alpharetta, Georgia, while simultaneously expanding its network in China with 55 new supercharger stations in Chongqing. The Alpharetta facility, located at the police headquarters, features 4 fast chargers capable of delivering up to 325 kilowatts, allowing electric vehicles to gain approximately 200 miles of range in just 15 minutes. This initiative not only enhances charging accessibility for local residents and visitors, but also supports the city's electric patrol vehicles, marking a practical upgrade from slower charging units previously used by the police. The transition to ultra-fast chargers allows police vehicles to quickly add range and return to patrol duties faster, stated city officials during the ribbon-cutting ceremony. On the other side of the globe, Tesla's expansion in Chongqing represents its largest single project of highway service area chargers in China to date, with a total of 212 charging piles strategically placed across key transport hubs and expressways. This rollout ensures that drivers can access a supercharging station roughly every hour of driving, significantly improving long-distance travel convenience for electric vehicle users. As of March 2026, Tesla has installed over 2,500 supercharging stations and more than 12,000 charging piles across mainland China, with over 950 of these stations now accessible to non-Tesla vehicles. This expansion reflects Tesla's commitment to enhancing its infrastructure and adapting to the rapidly growing electric vehicle market in China, which aims to increase its charging network to 28 million facilities by 2027. In addition to these infrastructure developments, Tesla is extending its financing incentives for the Model 3 and Model Y in China through April, offering a 5-year 0% interest financing option and a 7-year low-interest loan program. This strategy aims to make electric vehicles more accessible amid intense competition from domestic automakers. Overall, Tesla's dual expansion efforts in both the US and China highlight its commitment to enhancing the electric vehicle ecosystem, improving accessibility, and adapting to market dynamics. As we look to the future, these initiatives position Tesla favorably in the competitive landscape of electric mobility. Next up, another key development. In recent weeks, Tesla has faced significant scrutiny regarding its stock performance and future growth potential. Over the past 6 months, Tesla's stock has plummeted nearly 20%, raising concerns among investors about the viability of its ambitious robotaxi plans and overall market strategy. Despite a cumulative increase of approximately 37% over the past year, the recent downturn has many questioning whether the company can maintain its momentum. Barclays analyst Dan Levy highlighted ongoing capital expenditure (CapEx) concerns, suggesting that while Tesla is still viewed as a high-growth stock, the financial outlook may be clouded. He stated, Tesla is listed among 10 high-growth mega-cap stocks to buy and hold for next 10 years, but we need to address that. And that wraps up our update for today. Thanks for tuning in to Tesla Daily Insights. We appreciate your support, and I can't wait to catch up with you in our next update. Until then, take care.